Okay, let's make sure my headphones are on. Testing, 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 testing. All right, guys, good morning. Good morning. Welcome aboard to the Morning Note. My name is Carlos Garcia, founder and CEO of G.A.R Capital. It is 9:02 Eastern Standard Time, Tuesday, June 28th, on the G.A.R Capital News, or G.A.R Capital YouTube channel, not news service. Anyways, let's go ahead and begin and rock and roll. Hate to say, kind of a quiet one. Futures are up, don't get me wrong. Up 155 points on the Dow, Nasdaq up 0.31%, S&P up 0.45%, Russell up 0.68%, crude oil at 1.62%. To the upside, 111 a barrel, $3.75 a gallon for gasoline, 0.30%. Gold is flat, 18.24 an ounce. Silver as well, 21.18 an ounce. Euro dollar 105.41 for my forex people, down about 40 pips. 136.18 for the dollar yen. That's up 70 pips. Crazy how the yen has fallen. Bitcoin right now is trading at 20,939 is what I have on the spot price. Ethereum 1220, they're up 2% this morning. VIX is down 0.26%, pretty marginal, 2688. Again, still below 30, which is still a good sign. Dollar index up 0.35%. The dollar. I really want to talk about the dollar really quickly. Remember we talked about how important they are. Listen to the conference call or read the earnings report for Nike. And that is the big one. About 3% of their EPS was lost because of the strong dollar or FX headwinds. Very important, the dollar. 10-year yields 3.226. All right, taking a look at S&P futures. Nice and green this morning. Kind of following that yellow line. What's that yellow line? That's our 50-day moving average. 3,900 being our support relative. That was the previous gap fill that we filled on Friday. And then now we're right above it. So for now, I would consider that support for all stocks moving forward. That is based on the S&P 500, excuse me. Let's go ahead and bring up a couple of things here. Again, we talked about the VIX yesterday being that downward wedge. Same thing we talked about in terms of the market recap yesterday. If you want to take a look at that, a lot of things are showing breakout. That's what I'm seeing. A lot of things are showing breakdown. The things that are showing breakdown are going to help the cause for breakouts in equities, which again, we expect just another 80 points from where we are now to 4,000. You could see again that yellow line for Qs, that 50-day moving average kind of being that guide right now. 291.51 or so is your support. Let's take a look at the banks. Again, remember, some of them were returning some capital like Morgan Stanley. Some were increasing their dividends like Goldman Sachs and Bank of America. And some did nothing like Citibank and JPM. The ones that have done nothing, I mean, they're nothing to it. They're up a buck after hours. Citibank after hours, 48.50 now, 47.83. So Citibank is interesting for a breakout. I'd be watching that. Let's see if we get some volume. They did not increase the dividend or anything like that or kept any capital buybacks. Morgan Stanley is doing a little better, obviously. There is a gap to fill right around 82.50. You could keep an eye on Morgan Stanley as well. So my eyes are on the banks today as we had the stress test and then they went ahead and did their capital return to shareholders via stock buybacks like Morgan Stanley, 20 billion, and then you have dividend increases like Bank of America and Goldman Sachs. So again, it really depends on how you prefer your bank to operate their extra cash. What's interesting is that we're getting conflicting reports. So we have, of course, layoffs in JP Morgan's mortgage sector, which is fine. And they wanted to increase their capital requirement. They expect capital requirements to go higher. So JPM is definitely being a little more cautious, and that's fair. Morgan Stanley, again, has been talking about how weak the market is. Some of their analysts, of course, Mike Wilson. But that's not stopping Morgan Stanley from buying back shares of a tune of $20 billion. So I can understand one side of the coin saying, hey, be careful, a recession's on the way. But then the other side is saying, hey, we're going to buy back stock. Now, again, I don't know when the buybacks will occur. Or do they wait? Is there a blackout period? I'm not really sure. I'm not on the board of Morgan Stanley. I'm not even an investor of them. But again, I always kind of say this, guys. Watch what people do, not what people say. People could say a lot of things, but what they do is important. And Morgan Stanley, to me, is not consistent with what they're saying. Some of their analysts, granted, I don't think they're representative of the company as a whole. But again, if they're doing stock buybacks and increasing their dividends, That doesn't tell me that they're expecting this horrific recession or this crash of the consumer or this collapse of home prices or the collapse of employment. If that's the case, why would they be doing that? Why would they be returning capital to the tune of 20 billion? Again, they didn't have to. JPM didn't. Goldman Sachs didn't buy back stock. Bank of America. So again, that's something that I'm watching, and I'm like, I want to see what these companies say. Another one too, Nike, $18 billion worth of stock buybacks. Again, how can you say that it's expect the market to go down or the economy to get worse if you're telling me that you're gonna buy back shares? Why would you do that? Again, if I start hearing on these conference calls increase in buybacks or increase in dividends, again, to me, that just shows confidence in these corporate balance sheets. And again, that pillar that we talked about on Sunday, that's still holding up. So very, very important. I'll be watching banks today very closely to see what their right hand is doing while the left hand is talking. Okay, taking a look here at one more thing is the dollar, and we'll answer some questions. Nice bounce in the dollar. Again, you could see this downward wedge. So again, that I can't say it's invalidated, but again, you could go ahead and see that. Oops, let's go ahead and remove this drawing. And we'll just keep this here. So you can see again, we had that downward wedge. We broke out. Again, 105 to me is a key level. It's not really hurting equities here, but we are seeing that value names are getting bid. Why is that? Energy, energy. So let's take a look at crude oil, then we'll answer some questions. Other than that, it's not much going on out there. There's some news out there, but nothing really earth shattering, let's just say. So again, above 110.28 on the hourly. We're above the 20-day moving average on the 1 hour, 60-day chart. We go and bring up the daily. We're sitting right at the 50. We bounce very nicely off the 100. So the 100 could be a guide. I still expect us to get around to $90 to $95 a barrel of support. I think we're just going to retest that low, and I do expect us to go higher. I just don't think we're going to get to $200 a barrel or 180. The market tends to smooth things out. Remember those crazy commodity prices, cotton and lumber and all this other commodities that just spiked? Well, they're coming back down now. Even wheat prices are down. So again, it's you get these resets here and there. If commodities are so sharp on the upside, especially with any kind of recession fears, commodities tend to be a good recession, good inflationary hedge. So again, that again will be reset in a way. I still think energy companies long term in terms of capital return and being a value company, get good balance sheets, buying back stock, dividends. Again, what the banks are doing, again, we're seeing that from the energy companies too. Granted, the energy companies and the bank companies, depending on which energy company, valuations are relatively cheap. The question is, if you're buying energy here, do you expect us to sustain above $100 a barrel for at least a year? Let's just say. And if you don't, then I'd wait, which I'm doing. And I have energy positions in my dividend portfolio. But to go out of my way to buy them here, I just wouldn't yet. If you wanted to pull the trigger at 98.71, $100 a barrel, that's fine too. But I still think we can get a 10% pullback. Again, not a big one, not a big sharp one. Maybe we get some weaker than expected CPI, and then, or we get some OPEC chatter, or kind of a change in tone of rhetoric between Russia and Ukraine, NATO and the EU, and that could bring crude oil down to around that sweet spot of $100 a barrel. Still a psychologically big number for a lot of traders. Again, the round number theory being one of it. Let's go ahead and answer some questions. Hey, good morning. When is the Google stock split? John is asking. You know what's funny? I got that email from Robinhood. Google split date. Let's see it. July 15th. July 15th we just split. Faraz is asking thoughts on technical analysis here. Rejection of 3950 Fibonacci levels is en route to 3500. The assumption is that you're looking at E-mini futures or S&P spot. Now, if he says 3950 being that resistance, I'm assuming he's talking about, let me start this open interest here. I think you're talking about that, what, that 20-day moving average or 3950. I don't see any major moving average there. But again, if you're talking about fibs, let me see if I can redo them. If I can redo the fibs, well, based on the fibs that I have from the most recent peak for us, you could see that the low being 3664. Mind you, I can just adjust this, but it won't be necessary because we already have the top in place. So again, I don't see the Fibonacci level that you're speaking of. We did bounce off that 161.8 extension. But again, 4100 is your 100. I still say what the 4,000 is going to be that inflection point on that downward trend or downward channel. We should reject off that. And then you would want to go ahead and buy some portfolio protection, VIX, or you want to sell calls against your portfolio, that's fine, or you could buy puts. But again, I still think we have that shot to 4,000. It's not going to be just a straight shot like we had on Friday, guys. If we do, I'd be very impressed. But again, we're going to just have structured bites to the upside. Even yesterday was relatively choppy, but it was more of a digestion day of everything that happened on Friday. Good morning. Sitting on my hands till tomorrow or Thursday. Thoughts on the VIX so low? Thoughts on BlackRock? BlackRock is fine to own. Again, a great bank. I didn't see anything in terms of increasing buybacks or dividends. So to be fair, I really didn't look. BlackRock's a great company to own. I think financials here are a buy, but again, I wouldn't buy them here, especially when they're up. But again, I still like the main three: JPM, Goldman Sachs, and Morgan Stanley. Morgan Stanley again showing that they want to go ahead and return capital to shareholders. JPM being a little more prudent. Goldman Sachs increased their dividend. But in terms of the VIX, remember the VIX is volatility. People say it's the fear gauge, which you're not wrong. But the VIX is just coming down just due to a slow melt up that we've had lately. So again, we take the stairs up or the escalator up, and then we take the elevator down. That's just how it goes. But again, not a lot of fear in terms of the options market because that's what the VIX is measuring: call options, put options, and such, just in the rolling 30-day period. And keep in mind, July seasonally is pretty strong. Again, volumes tend to shrink a little bit, but it doesn't mean that the stock market is going to be weak that month. Just in terms of seasonality, July is relatively strong. Again, we do have earnings season, but August is when we really start cooking as we start pushing towards the third quarter. Let's go ahead and see. We will retest lows this week. I don't know if that's a question or a statement. So again, I needed a question mark or a period because I don't know if you're telling me or you're asking me. In terms of SPX for us, I don't have that Fibonacci level, but I can go ahead and add it. Or I did have it. Let's go ahead and remove drawing. We'll go ahead and redo it. We'll do it off the weekly. So for SPX, I did not have the fib. So I start from the top. Some people usually start from the bottom, but I start from the top. And then I go all the way down to 39.37. Is that it? There you go. 33.41. So the Fibonacci level 39.50, I don't see it. I could see that we are right at the 23.6. So again, kind of where we closed, but I don't see what you're seeing in terms of the 39.50 fib level. Oh, probability of retest the lows of this week. If you're talking about the actual lows that we just printed yesterday because the week just started, do we retest it? I mean, we're close to support. I don't think we do, to be honest. I think we go higher. But again, I pretty much at most, I think 3,900 will be probably tagged. But right now, the 50-day moving average is kind of showing us the way higher. But I would say a pretty slim risk that we retest the lows. Granted, any kind of big news doesn't come out. In terms of news, really nothing really special has come out, guys. I mean, we have the house price index I just retweeted. Wholesale inventories were 2% month over month in May. Estimated was 2.1. Previous was 2.2. Advanced goods trade balance negative 104.3 billion was estimated better than 105 billion negative. Retail inventories month over month 1.1%. The estimate was 1.6%. So there you go. I mean, not a ton of news. As we know, we're ahead of a holiday of July 4th on Monday, so the market will be closed. But I'll be keeping an eye on everything as we go. But in terms of news, there's just not much there. I don't think there's going to be much news to the downside unless I'm missing something. I think we have some OPEC meetings. Oh, no, excuse me. We have the G7 meetings. But other than that, I mean, I still think we're going to get to 4,000 regardless. Fed Powell speaks tomorrow, driving him up as always. Driving it up, well, yeah, that's kind of his job, I guess, sometimes. I think that he said what he needed to say. This one is just kind of a open forum to speak. It's not an official aspect. Sure, we know he's the Fed chair, but he already testified in front of Congress. He was grilled by the Senate and the House. I think we know where he stands. And I don't think 5 days is going to change anything. Unless there was some revelation over the weekend that he must have gotten, I highly doubt that. And we haven't had much of a change as of yet. We still have a lot of reports to go, a couple of inflationary reports next month. We have earnings. So I would say this is the calm before the storm. So this is why I'm just watching what I'm watching. All right, guys, we'll leave it there. I'll catch you guys afterwards for the aftermarket recap at 5 p.m. Eastern Standard Time. And we'll see you then. Cheers, guys.